Well, actually, now we're selling off again. Every time you turn your head, you're seeing 5 and 10 tick swings in the 10 years. We're down a little bit right now. A lower close puts up a minor reversal trade here that projects to take out this morning's low at 130.17. Got to be careful. The problem is here, where do you put your stop? Unfortunately, the stop level has to be above that high at 131.11 plus. That's a tough risk-reward ratio there for anybody trading right now. We're also going into, we have another buyback by the Fed tomorrow. Thursday they start selling the short end. And then Friday we have the jobless claims number. I think it's time to kind of be careful. Let's sit on our hands a little bit here. Small trades. The equities are whipping around. They've traded from, down 15 handles in the S&P Mini this morning to up 10, and now we're trading up 1 on the day. So we may get a bullish reversal there that projects a kind of a bounce back. I'll try to send the equity charts out. Remember we talked about how the NASDAQ had broken down on that flag formation. Well, the S&P broke out of a triangle, and it looked like the support trend line that we broke there was around 1105, 1107. A lot of times you'll see a market retrace after a big breakout of a trend, out of a pattern like that, back up to that breakout level. We're going to watch that. If the S&P can get back up around that 1105, 1107 area tomorrow morning, if there's any kind of a bearish reversal, aggressive traders may want to put a short on at that point. Looking at the other markets, gold got crushed today. Now, I think there was some misinformation early this morning. I know some people talked about margin hikes in gold. I didn't see that. The CME did hike margins in a lot of things, copper, platinum, ultra bonds, and notes today. So we did see some margin hikes, and I'm sure that's impinging on the trade that we're seeing in the treasuries today, along with the uncertainty from this Operation Twist. We've never seen we haven't seen anything like this in a long time. I think it was in the early 60s the last time they did a twist-type operation, and it certainly wasn't of any near the size that we're going through now. So gold sold off hard, down $50 at one point. I'm afraid to look at the screen right now and turn my head and see how much it's sold off. The metals are very weak. I think that talks about the deflationary headwinds that are facing the economies all over the world right now. I've been kind of cautious on that. We saw the big sell-off in the gold and the silver that have met some important objectives at their lows from last week, but it takes time to heal those kind of wounds. When you see a big sell-off like that, it's going to take time, sideways, higher, choppy trade. I think gold could be stuck between 1575 and 1675 for another couple weeks here, and if you're so inclined, you can trade those ranges, but you got to be careful there too. You're seeing massive moves, and again, there were rumors of gold margin hikes too, which will hurt the market a little bit here. All right, I'll try to get that equity chart out. That's kind of the driving force right now. That's something for us to key off of. We have different formations. The NASDAQ had a bear flag, and the S&P had a triangle breakout. The flag's much more bearish than the triangle, but I think the S&P, which is the bigger contract, has a lot more volume, a lot more participants. That'll be the one for us to watch. And again, I want to highlight that 1105, 1107 area. If the market gets back up there and we see any kind of reversal pattern, like I said, aggressive traders might want to try a short at that point. All right, a lot of stuff. Keep your eye on the target and keep your eye on your risk controls. Smaller positions, good stops, all the important things that we need to watch here. Have a great night. We'll see you tomorrow.